even like we're talking about music related things, that is actually what you're looking at here in terms of the management accounting. It's taking the knowledge and using it more practically. So that's the big difference with these sections. Okay, so the reason why we're writing a heading cost and management accounting is because we need to know context. So this is internal or external? Internal, yes, because management is detailed. So the financial accounting, the first 27 chapters, okay, that's not going to be looking at detail. All of this was summarized. This is looking at specific areas. So if I'm looking at absorption costing, the word absorption means what? Sponge, to soak up. Right, to take in water and that. So absorption costing is looking at exactly that. It's the company's ability to absorb those costs. Okay, because the company needs to operate and the company is going to have certain expenses, and those expenses need to be absorbed. Okay, so if you wanted to define what this is, okay, just as an introduction or a heading, you can say absorption costing focuses on the allocation of costs to the business. It's all about costs. It's cost everything here. You'll see fixed costs, variable costs, all these different types of costs.
Focuses on that.
Yeah, focuses on the allocation of costs in a business. You can just add a little note after this. You can say the business must, inverted commas, absorb costs in order to generate a profit. Okay, so just another point, the business will absorb, inverted commas, the costs. That's what you're looking at. It's all cost related. It's looking at allocating costs, how do we calculate costs, how do we identify costs. All of these things we're going to look at now because it's cost and management accounting. Okay, so the business will absorb costs in order to generate profits, okay, or in order to generate value. Okay, separate heading, subheading, you can label it 1. Okay, the first topic is types of costs. That's the first bit. Okay, so before we can look at allocating costs, we need to know what the different types of costs are. That's the first part. Okay, so types of costs, the first type. Type 1, fixed costs. Okay, that's an easy one. When you think of the word fixed means? Exactly. So what costs do you think don't change? Would the rent change?
Could increase.
But only after a year maybe.
Yeah.
Okay, so when looking at a fixed cost, they also call them period costs. So next to fixed, or above it or below it, just put a bracket, period costs. Another name for fixed costs is a period cost. And the reason why is because they're for a specific period. Okay, so maybe for the first 3 months or 12 months, the rent is fixed. Okay, rent expense. Yeah, so rent shouldn't increase month by month. Okay, that would be very unusual. Other things as well, something like insurance. Here they've spoken about even salaries and wages. Okay, maybe once a year you'll give your employees a raise.
Yeah.
Okay, but you're not going to raise their salary every single month. Okay, or decrease their salary every single month. Right? That variability isn't going to apply.
Yeah.
Okay. Second one, variable costs. That's the opposite. Okay, that's an easy one. All you need to write down there is costs change often. Okay, so if we talk about a variable cost for a business, what cost would change every single month? 100%. Good. So that's an example that you could write down there. E.g., water and electricity. Right, 1 month it's colder than another month, so we use the heater. We need to put more power on in the actual business. Okay, or the business is using more water and lights. Okay, changes often, and it's never the same. Even if you use the same or the similar amount. Okay, so maybe it's approximately 5,000 a month. Okay, for the business. It might be 4.9, it might be 4.8, it might be 5.1. Okay, similar but never the same. Okay. Right, with variable costs, they've split it. So underneath variable, you need to, no, it's not a separate cost. Underneath variable, you need to expand. You need to write down 3. Okay, so variable costs are split into direct materials. See, this is actually your business. Direct labor and overheads. Okay, a little bit of business here actually, that you probably recall from that chapter or that module. Okay, so those are the variable costs, and the business will have to allocate them, obviously, if they want to absorb those costs. Okay, are variable costs going to stay constant or will they change?
Variable costs will change.
Yeah, but can some of the costs stay constant?
Yeah.
Yeah, so there's something called a semi-variable cost. That's the next one, number 3. So you've got fixed, you've got variable, and then number 3, semi-variable / semi-fixed. They both refer to the same thing. So if something is semi-variable, it's kind of fixed. If something is semi-fixed, it's kind of variable. So it's two things of the same thing. Semi-variable / semi-fixed. Okay, so what does that mean? Self-explanatory, right?
Yeah.
So
sometimes changes.
Yeah, so you can say the cost has a fixed component as well as a variable component. Okay, so what I mean by that? Well, let's think about paying someone salary and a commission. Okay, let's say you have a salesperson in the business. Right, you are going to reward that individual the more they sell.
Yeah.
But at the same time, you're going to give them a basic.
So the cost has a fixed component as well as
a variable one. Okay. It's actually self-explanatory. When you see semi-fixed, semi-variable, it relates to exactly that. Okay, number 4, stepped costs.
Just give me the example, yeah.
Okay, e.g., basic and commission. You can use that one. Okay, so the basic part would be the fixed part, the commission part would be the variable part, but both make up the remuneration for the individual.
Okay.
Number 4, stepped costs.
Pardon?
Stepped, as in like step, like a step.
Right.
Yeah, stepped costs. Okay, so if you look at steps, what happens? They increase, but they increase in like steps.
Yeah.
That's exactly what you're looking at here. Okay, so you can put a note here. Stepped costs are based on production levels. It looks at the whole idea of economies of scale. Right? If you're producing X and you can produce Y, you might be able to step up your cost as well as your production. Okay. Step costs based on production levels. That's fine. You can say e.g.
Yeah.
Bulk purchases. Okay, bulk purchases at higher levels. Okay, the cost would have changed. Okay. So obviously the cost will increase. It's exactly like that. Exactly stages. Okay, so we start out producing 200 units. Then we produce 400 units. Okay, we've stepped up the costs. Okay, there could be certain costs that would be incurred at that level. Right, so the definition I've described here is stepped costs remain fixed until a certain level of business activity is reached. That's all. Okay, next one. 5, I think, okay?
Yeah.
Sunk costs. That one you know from economics.
Sunk.
Sunk. S-U-N-K. sunk costs. You still remember what this is? Okay, if something is sunk means like it's like the ground. Let's say if you were on what do they call that soil, sinking sand. Okay, if you jump into that, you're gonna sink, and once you're no longer on the surface, it's sunk. Okay, something is sunk when it's like underneath the surface. Again, you can use that to remember this. These are costs that you cannot recover. Okay, so sunk costs that cannot be recovered later. Examples here: market research costs. If you're researching the market, it's a sunk cost. You can't recover that, whether you do the project or not, whether you implement or not. Okay, costs that cannot be recovered. Good. E.g., market research costs. Okay, then they put two other notes here in terms of total cost and unit cost, but this isn't a separate cost. So rather, instead of putting it as number 6 and number 7, rather to say notes, all costs can be added up to get the total costs, or we can look at unit costs. It's two separate scenarios. Okay, note all costs can be added up to get a total. Yeah, so we can either get a total, and that's a total cost, or we can look at a unit cost. Both are applicable when looking at absorption costing. Yes, all costs added up to get a total or unit cost. Okay, what is the unit cost? It would be per unit. So for example, if we're manufacturing bottled water, okay, obviously the rent for the factory is a fixed cost. Then we could allocate that cost to every bottle that we've produced. Okay, a per unit cost. Right, and that's it. Now we've got a new section, separates. So that was all looking at types of costs. You've covered it all. This is just a small little bit, just looking at how we record and manage our employees. So the heading for this is wage systems. Okay, it's good that you're using a different color because the wage systems looks at the allocation. Okay, a basis of allocation. So how are we going to allocate costs to a specific item or product, depending on what we're looking at. Yeah, so the heading for this section is wage systems. Okay, first point, labor. Right, so how do you keep track of costs for labor? What must you do? How would you pay your employee? So your lady that's doing the beauty stuff, right? Do you pay her according to her time? Do you pay her according to the client? Do you pay her according to a different factor, a different basis? Commission. Okay, so that would be piece of work-based remuneration. That's the second one. So underneath labor, first type, time-based remuneration.
So labor, what goes under labor?
Labor is the heading.
Okay.
Point number 1, time-based remuneration. Okay, so if you're employing a staff member,
pay them per hour.
Pay them per hour, time-based. Okay, number 2, second one, piece work remuneration.
Piece as in a piece of?
Piece of item, yeah. P-I-E-C-E.
Piece rate.
Piece work remuneration. Okay, so piece means a portion. Okay, so if you're making a car, okay, if you make the engine, we'll pay you for making the engine. That's piece-based. Right, so it's like it's more like another word could be task-based. Okay, for piecework. So what is the task? Is the task making or painting a portrait? Okay, so that's a good example. A painter, okay, an artist. An artist would be paid based on their Work. Okay, so if you commission a painting to be painted, okay, you'll say, well, I'm going to pay you X for a painting. Okay, I don't care if it takes 10 hours or 20 hours. The thing is, the painter will take as much time as they need in order to produce it. Okay, so it's piece-based remuneration. Okay, and the last one is a bonus scheme. Right, so now we need to discuss both in a little bit more detail. The first one we've already looked at. We just need to add to it. So next to time-based, you can just put a bracket, a rate. They call it a time rate. Okay. Next to piecework, you can put a bracket, units. Units. Okay. That's unites. No E. Okay. Yeah, units. Okay, then for bonus schemes, you can put a bracket next to that. Reward based or target based. That's a little bit different. Okay, reward or target based. Okay. Yeah, so piecework is based on units generally. Time based is based on a rate. And then bonus schemes is based on a target. Okay, so meet the target will give you a bonus. Okay. Alright, and then they just give you some examples here. They actually talk about specific schemes, which is a little bit too much detail, I think, but we can look at them. Do you have the work program? Yeah, that'll help with guidance in terms of how much detail do you actually need in this section. Let's check, just to make sure we're covering what we need to. We're not covering too much as well. Okay. Okay, here's the costing. Cost management accounting. The purpose of cost accounting. We've looked at that. Classification of costs. Direct, indirect, we need to look at those costs. Okay, the labor costs. Time rate, piece rate, bonus system. Okay, they do need you to look at the others. Okay, so yeah, we have to.
Okay.
This belongs to the bonus schemes.
So these are different headings under bonus.
Well, it links to it. You can put them separate. I've seen the textbook, they've kept them separate. So let's keep it separate just to stay in line with what they've got there. Okay, you can just put a note here. 3 other schemes. So a bonus scheme is one scheme that we can use to allocate cost to workers, okay, wages. 3 other schemes. Okay, the first one is called the Halcyon. Halcyon. Yeah, Halcyon Scheme. That's what it's called. Okay, so this scheme involves an extra reward for the worker based on half the time the worker has saved the business. So a note here, involves extra reward when the worker saves time. You can just say brackets based on half the time. That's what you're looking at. So if you have a worker, let's say, let's use the example with the lady that does the beauty stuff, right? Okay, let's just say, what do they call it?
She's early.
Yeah, the nail, like, I don't know, she needs to do someone's nails. Okay, and normally it takes an hour. Now, she's become so good at it that it now takes her half an hour instead of an hour. So now you're going to reward her, but remember, we need to keep the standard the same. Okay, so we're not saying that she does half an hour, but then the work is half an hour.
Yeah.
She does the same job, same quality, same output, but she does it in half the time. Okay, then they'll be rewarded accordingly. Okay. The second scheme, that's the first one. Scheme number 2 is the Halcyon scheme. Okay, so same word, Halsey. Okay, dash weir, Weir. Yeah, scheme. Okay, this is the Halcyon scheme. Okay, so what does this involve? Here's the definition. This scheme is similar in operation to the Halcyon scheme. However, the extra reward is based only on 30% of the time saved. Okay, so same as above, you can just say that. Same as Halcyon or same as above, but the extra reward is based on 30% of the time saved. Extra reward based on 30% of time saved. Right, so all these schemes are basically looking at ways to compensate your workers for being more productive. Yeah. Okay, is productivity important? Yeah. Very. You don't want that nail job that needs to get done to take 3 hours. Okay, if it takes 1 hour, great, because maybe that's standard in the industry. If it takes less than that, brilliant, let's reward the employee. Okay, that's exactly what you're doing here. Okay, last one. The Rowan scheme, R-O-W-A-N, Rowan. That's the last one here. Looking at this whole idea of a reward-based or bonus-based system. Yeah, number 3, the Rowan scheme, R-O-W-A-N. R-O-W-A-N. Yeah, Rowan scheme. Okay, this one's a little bit more complicated, so just hear what the definition is first and then we can summarize, just to make it shorter. Okay, they say, the reward in this type of scheme is based on the relationship between the time actually taken to complete the job and the time originally allowed for the job. This relationship is used to calculate a proportion of the time saved. So if it was thought that a job will take 12 hours and is completed in 10, the bonus will be based as a percentage of, which is 10 over 12 of the hourly rates. Okay, so see, it's quite complicated. So to summarize, you can just say, it's a reward scheme based on the relationship between scheme based on the relationship between between the time taken to complete the job compared to the time allowed for the job. Okay. Right, so that's kind of like saying compared to the time allowed for the job. Okay, so again, just to give you context, you allow the beautician to take an hour for one job relating to the nails. Okay, but let's say one day she's really effective and it takes her half an hour. Okay, then it'll be half of the remuneration as a bonus. Okay, if she's a bit tired or the job requires more effort and it takes 3/4 of the time, so it's supposed to take 60 minutes, but it only takes 45 minutes. So you would base the remuneration or the bonus on the 15. Okay, that 15 minutes that she saved, basically. So you can just say the last bit there. A proportion / fraction is used to calculate the bonus. That's all. Okay, it's fraction based or proportion based. Like here, the job was supposed to take 12 hours, but it took 10 hours to complete. So her bonus is 10 over 12.
A fraction.
Yeah, a fraction or percentage is used to calculate the bonus.
Okay.
Got that?
Yeah.
Okay. Now we've got a totally different section. Okay, so what we've covered now was two things: types of costs and wage schemes. Okay, how do we measure somebody's cost in terms of their wages. Okay, so if the beautician is doing X and maybe she's doing different jobs, now how do you measure that? Okay, are you just paying a basic rate for everything she does, or are you like more specific? So maybe doing nails is easy. Okay, maybe easier than doing makeup or something else. Okay. All right, so that's what we've looked at so far. Is that okay?
Yeah.
Right, this is a new section, but relating to disclosure.
Okay.
Okay. So you can put a heading here. It's 2.3. It's looking at costing statements. It's short. You can actually leave it on that page. You don't have to start a brand new page for it. It's not long. Okay, the heading would be absorption costing statements. Okay, the heading for this, or you've got the heading for this, the note for this would be okay, absorption costing determines the total cost of production. That's the summary. That's what you're doing here. Okay, we can add another note to it.
Determines?
Yeah, absorption costing determines the total cost of production. Second bullet, all costs incurred must be absorbed. Yes, it's everything. All costs incurred must be absorbed. Examples we'll look at later when we do the assignment. They have given you one here. It's actually quite basic. I just want to show it to you. Okay, so if you look at this example, what do you have here? Lots and lots of costs. What do all these costs relate to? Production. Okay, so what must we do when we look at absorption costing? We need to look at all the costs because we're going to absorb it. So what did they do here? They added everything up. Okay, yes, they've split it into different costs. So they've shown direct material, direct labor, royalties, prime costs as one classification. Then they've done the same thing with the others. Indirect, other costs. Just to group it. Okay, so all they've done is they've grouped costs into those headings. Fixed costs, variable costs. What cost does it belong to? But the key bit is that. Get the total. So this doesn't make too much of a difference. Okay, if they wanted to split it up, then we will. But the key here is to get the total. Okay, what do we have as the total cost? Because then we need to allocate it to the production. Okay, to the absorption. Okay, of the costs. Alright, so that's just what we're going to be doing. That just summarizes the next bit, okay, which is the last bit. This bit should be quite long because they've looked at allocation. Okay, actually not that long. I see they've actually grouped it quite nicely in terms of separate subheadings. Okay, alright, so uses of absorption costing. You can still leave this underneath this heading. So you've got a nice big heading. You can put a subheading for this, uses. Just use the word uses. Yeah, so why would we want to use absorption costing? How do you think it's going to help us? How? How can it help us make profit?
Because if all the costs are covered.
Yes, okay, so it's important to manage the cost because you need to price your products.
Yeah.
Okay, so it's actually looking at the selling. That's the key. Okay, so number one, determining the selling price, which affects the profits. You can write down another point. Second point, determining the selling price in order to work out the profits. Okay, because that's what you just said. You said in order to recover everything, we need to know what we need to cover. Basically, it's quite self-explanatory. Right? If you're going to be pricing your service in terms of the nails that are going to be painted and all of that, you need to know, well, what does it cost? Okay, how much does how much nail polish is used? What else do you use in order to do that job? And then that must be covered. Okay, when you charge your customer. Okay, so if you're looking at the selling price, okay, what selling price am I going to charge my customer for doing the nails? Right, and that's going to affect not only your marketing maybe or your sales, but also your profits. Okay. Right, then the next one is overheads. Number 2. Still looking at this whole idea of uses. Second bit is allocating overheads.
Okay.
That's what it is. Allocating overheads.
Overheads allocation. Yeah.
There's a lot of different bases here. So maybe rather asterisk this and just say page 90, unless you want to write down 2, 4, 6, 7 different bases. Okay, the bases you don't have to study and remember because they have to tell that to you in the question. That's why I'm not too worried about it. Page 290. Let's rather understand it. Okay, so if I'm looking at an overhead, let's say the overhead is rent. Okay, so assuming that you have to pay for rent of that place next door. Okay, let's say the rent was X. How are you going to allocate rent to the lady that does the beauty? What basis are you going to use? Are you going to use time?
Good.
Would you?
Aggression.
No, it's space. So how much space does she use? Yeah. Then you'll allocate that. Do you agree? Okay, so there you see rent. Rent based on allocation or apportionment would be floor area.
Yeah.
Right, so if you're renting out a building, okay, and she uses, I don't know, 2 square meters to do what she needs to, okay, you could allocate that cost to her and say, well, if she's going to be doing work, i.e. nails, okay, how much of the rent are we going to allocate to her? And that's what we could do. Okay, the rest we need to cover elsewhere. Something else, insurance. That's an overhead. Yeah. The company pays for insurance. So now how do you allocate insurance to a specific product? You could look at its the value. Okay, so now let's say you have to pay for the insurance for the furniture or for the equipment, exactly. Then you would base it on the value. So it's quite self-explanatory. This they have to give to you. Okay, they have to give you a basis because you can't guess. But when we look at questions, if they ask you to allocate costs, they need to give the basis of the apportionment. You just need to remember that there are different bases of apportionment. Okay, so just to summarize all of that, different overheads need to be allocated using a specific basis. Okay, different overheads need to be allocated according to different bases. Okay, bases. Okay, so you could use the basis of floor area or value or volume or personnel. There's such a lot here. Okay.
According to different
bases. The base. Okay. Right, good. So there's an example here. We'll do some and look at the past papers and the assignments. Okay. This is just a short bit of theory. You can still write that down there.
Number 3 or
it's separate to uses,
okay,
but still part of costing absorption statements. Okay. Transferring service department costs. That's what it's looking at. Transferring service department costs. Transferring service department costs. Okay, the study notes underneath this. Each service each service is measured separately and allocate to the department. Okay, so example, you might have a cleaning service. Do you agree the entire business needs to be cleaned, right? Okay, so if I've got the canteen, here they've used the word canteen and they've used the word maintenance, okay, and personnel. So different departments, okay. If I'm looking at production, that's also a department. So the canteen is part of the business. The factory is part of the business. So the service that we have in the business is cleaning services. Okay, the factory might need to be cleaned more than the head office, the office. Okay, so for example, this would be like corporate offices, like it's more corporate. You're not like manufacturing anything. Like there's no baking or there's no like material like stuff like that. So there's no mess. I mean, there's not much mess here, right? But maybe with the nail polish there is. Maybe some of that gets messed or spilt, or the stuff that needs to be cleaned or whatever. Okay, so that's the service. So a service is cleaning service. And now we allocate that to every department. Okay, so we'll look at the factory. The factory might need to be cleaned more than the storeroom or than the finance department. Okay, or the computer department. Okay, so it's transferring the service to the actual department. That's different. It's not looking at recovering a specific cost, it's looking at a service. That's the difference. Just to give you some examples here, they spoke about canteen costs. Okay, is a canteen cost a service? Yes, because you're going to be giving your employees food.
Yeah.
Okay, so can I recover the canteen cost from all the different departments? Yes. Okay, so all the different departments will be buying food from the canteen. So that cost could be allocated based on that. Okay, how many people are working each department, and that type of thing. Okay. I don't know how detailed the questions are going to get. We'll have to look at the assignments to comment, because this can be quite complicated depending on how deep you go in terms of allocation. Okay, here they've given you a table and they've asked you to do some calculations. Okay, which is quite nice because at least they've given you some guidelines. Okay, so they tell you which system to use. Okay. Alright, I think let's find a place to stop here. How are we doing with time? Might be getting a bit too much.
Yeah.
Okay, the absorption of overhead, because that's looking at different rates, that's quite a bit, and that looks at calculations that we can maybe leave for next time.
These chapters are more in depth.
Yeah, and it's also new work, this you haven't seen before. Okay, now so just finish off this and then just start the next heading and then we can wrap up. Okay. Alright, so the next bit, still part of that whole main topic, but separate. Reciprocal services.
Spell that, sorry.
R-E-C-I
R-E-C-I
P-R-O P-R-O
Yeah.
C-A-L. Okay, that's reciprocal. And then services. Okay, so reciprocal services. What does that mean? Well, the picture becomes even a little more complicated when reciprocal services are provided. A reciprocal service is the term used when a department provides a service in exchange for another service. See, it gets more complicated. That's why I was checking what does your actual questions look like, because management accounting is very detailed. Okay, it's a lot more detailed compared to financial accounting. Okay, so all you need to write down there is one service being allocated. One service. It could be more than one, but I'm just using one as the
one service.
One service allocated to a department in exchange for another service.
Exchange
for another service. See, here they said a department provides a service for another department and receives a service from the same department. See, it's an exchange of services. Okay, so the cleaning department is going to help the maintenance department. That's what they said here.
Yeah.
Okay, so if you maintain the building, okay, if it's a big company, they'll have a maintenance department. But if the light stops working, someone's going to come replace the lamp, the light bulb. Okay, that's reciprocal. And then here we've just got the absorption. Okay, this is separate. This you can put a big heading because this will be split into separate calculations.
Okay. So
Okay.
new color.
New color, yes.
The absorption.
Yeah. Rather use the word allocation of overheads. Allocation of overheads based on absorption costing. Okay. But because there are lots and lots of different ways of allocating your overheads, we're using the absorption costing specifically here. Okay. Right, let's label them and then we can discuss them next time. There's quite a lot here. There's 4, 5, 6. There's 6 in total. Okay, let's just list them and then we can look at the examples later. Okay, so what are we doing here? We're absorbing costs, and the costs that are being absorbed are overheads. Okay, can you think of examples of an overhead? We saw them earlier, types of costs.
Water and lights or...
No, water and lights isn't an overhead. Water and lights isn't an overhead. Telephone isn't an overhead. Labor isn't an overhead. That's direct labor. Rent.
Okay.
Okay, things that are inverted commas, blanket costs.
Yeah.
Okay, something that's across the board. Okay. Right, so the methods, you can just label them all and we can look at them later. Number 1, direct labor hours. Direct labor hours. That's the first method. Second one, machine hours. See, these are all the different allocation methods. Third one, direct labor cost rate. Okay, that's slightly different to the direct labor hours. Okay. Number 4, direct material costs rate. Yeah, material cost rate. Okay, then the last 2, prime cost rates. That's the 5th, and the 6th is unit produced rate. Okay, prime cost rate. That's number 5. And then last one, unit produced rate. Units produced. I see you like putting an E at the end of units. Unites. Unites. Unites, yeah. Okay, units. Perfect. Okay, so let's leave the detail for next time because we need to put some examples here in terms of allocation. All of them. We don't have too much left to do here. We've covered the bulk of it. Yeah, it's literally...
Should you maybe finish this after the break?
We can if you want to, yeah, not a problem. Yeah, then it's complete. That's fine. That'll work.